I'm at REIT World 2012 in San Diego, and joining me today is Anthony Paolone, REIT analyst with JP Morgan. Thanks for joining us today, Anthony.
Thank you for having me.
When we spoke over the summer, you had a positive outlook for regional malls in the second half of the year. Did the sector live up to your expectations?
It actually has. So the mall stocks are actually the second best performing property type now year to date. So they've done well from a stock point of view, and from an earnings point of view, we just got through third quarter earnings, and the average mall REIT beat consensus estimates by about 4%, pretty consistently across the board. So yeah, it's actually worked quite well.
What are some of the sectors that you have your highest hopes for as far as performance for next year?
Well, as we look into next year, we think the mall space will continue to do well. The fundamentals are there for them. And what we're really watching closely is what transpires in the office group, which has been a very sluggish space due to fairly tepid job growth. And the hope is that you start to see some improvement on that front.
What do you think will be key for REITs having a prosperous 2013?
Well, for 2013, we hope two things occur that will keep the stocks moving in the right direction. Number one is we hope you'll have a backdrop with consistent job growth and a better economic underpinning to commercial real estate fundamentals. And second is, we think from an investor point of view, a continued attraction to dividend yielding stocks and just a more broad approach to investing in various segments in the market. What we don't want to really see is folks leave REITs behind and rotate into other areas. The group has had a very nice yield and level of growth that's attracted capital, and we hope to see that continue.
In your opinion, what would you say has been the dominant REIT story in 2012?
Well, probably one of the most interesting things is 2012 has been the second year in a row where over the course of the year the macro backdrop's actually deteriorated, but yet REIT earnings have been revised generally up. And so it goes to the durability of the cash flow streams that these companies produce. And I think that that's happened again in 2012, just as it did in 2011. And it's pretty remarkable.
Great. Thanks so much for joining us, Anthony.
Thanks for having me.
I'm Carissa Chappelle for REIT.com.